Welcome to the Everything Financial Radio Show. I am Dennis Tubbergen, your host, and you are listening to the Legacy Radio Network. Glad you're with me today. Boy, we've got a great show lined up for you today. In this segment, I'll be interviewing Mr. Robert Prechter. If you're not familiar with Bob's work, Bob has written 13 books. The most famous and most recent, Conquer the Crash, was actually published first in 2002, updated in 2009. Very, very excited to have Bob on the show. If you've not read Conquer the Crash, it's an interesting read. You can pick it up and read what Bob wrote 10 years ago as to what was going to happen in the economy, and he has been spot on. So very excited to have him on the show today. You'll want to stay tuned for that. I'll also be talking about some news that really demonstrates the type of economic winter season that we're in. If you're a new listener to the Everything Financial Radio Show, we happen to believe that the economy moves in cycles that we have named after seasons. I shouldn't say we have, but many economists have. And in the winter season, which is the season in which we think we find ourselves, debt levels have reached excesses, and now the economic circumstances in which we find ourselves are as a result of having to deal with these excessive debt levels. Well, now in the state of New York, you're not going to believe this. This Mr. Mish Shedlock, who's been a guest on the show, brought this to my attention this past week. In the state of New York, if you're a municipality and you can't meet your pension fund contribution obligation, you can now borrow the money from the pension to meet your obligation. So tell me that's not a Ponzi scheme that's not going to crash at some point. Europe's debt woes continue. We'll be talking to Mr. Bob Prechter about that as well. And is Spain ready to follow in the footsteps of Greece and have the Dutch had enough? Are they going to bow out? Some strong language from the Dutch Freedom Party this past week. If you've not attended one of our discovery groups, you can do so. You can register for one by going to personallegacyseminars.com. That's personallegacyseminars.com. And just click on the appropriate location. We also have available our 2012 Market and Economic Outlook Home Study Kit. If you'd like to get a copy of that, it's complimentary, it's free, a lot of information on the current economic winter season in which we find ourselves and how it might affect you and your money. You can go to investingapproach.com. That is investingapproach.com. And just let us know where we should mail your home study kit, and we will be glad to do that. Also, quick reminder that we will have another round of discovery groups, 3 different discovery groups in the month of April, as our March discovery groups are nearing capacity. You will have the ability to go to the Personal Legacy Seminars website and register for the April discovery groups as well. So, again, glad you're with us today. A lot to talk about, and we will go to the phones now and talk to Mr. Bob Prechter. I am privileged to have on the phone with me today Mr. Bob Prechter. Bob is author of Conquer the Crash as well as 12 other books. I've been a fan of his work for a long time. And, Bob, it's terrific to have you on the Everything Financial Radio Show, so appreciate you joining us today.
Yeah, it's an interesting time.
Very interesting time. Bob, I'm just going to jump right in. Given your work in market forecasting, can you tell our listeners, what is your view for financial markets moving ahead, both stock and bond markets?
Well, most of the markets, I think, have completed or are completing or in the process of completing a bear market rally, a partial retracement of the decline in 2007 to 2009. That's especially true in the stock market. I think it's true in the commodity markets as well. One thing that happened recently was that we generated a whole lot of very, very bearish internal momentum figures, what we technicians call momentum figures, and those have to do with the speed of the advance, the number of stocks advancing and declining, the advanced decline line, in other words. The tick reading, which is a reading of the number of stocks last traded on an uptick versus downtick, the number of indexes going to a new high. You know, the Dow made a new high over last year by 1%, but the transportation index was 6% below last year's high. The S&P made a new high by 0.5%, which a lot of people celebrated, but they didn't notice the New York Composite Index, which was 6% below last year's high. So I think the markets have made essentially a double top so far between 2011 and 2012. And it's a small version of what happened in 2000 and again in 2007. That was a very large double top. This is a smaller one. We've got negative internals. I think one of the big things that ties the stock market to commodities is the fact that in the couple of weeks leading up to the end of February, a whole bunch of bears turned bullish and a whole bunch of bulls got even more bullish, and they were forecasting new all-time highs. And we had the same thing happen in an odd place, gasoline. I don't know if you've been reading the papers. I'm sure you have, and you've noticed people were vying for each other to predict whether it was going to $5 a gallon, $6 a gallon, or $7 a gallon. And whenever a whole contingent of people extrapolates an old trend very, very far into the future, you can pretty well assume that's a sign of a turn. So overall, I think we're ending a bear market rally in most financial instruments.
So, Bob, you think that's true in the stock markets, and when you say that extends to commodities, would that also include gold, in your opinion?
Yeah, I think gold and silver topped last year, and they've had rebounds as well. That remains to be seen. I think we can talk more about that in detail, but for the time being, yes, I think that we've been in a reflationary wave. This is the second reflationary wave, the first one being 2002 to 2007, plus or minus a year, and the second one being 2009 to now so far. It was interrupted by a pretty severe deflationary bout, and I think we're setting up for another one far more severe than what we saw in 2008.
And Bob, I want to get to that. Your organization and you, especially individually, have done a significant amount of research. I don't know of any organization that researches the technicals of markets to any greater extent than you. And we, in your book, Conquer the Crash, you talk about the Elliott Wave cycle and the seasonality of these cycles, to use that analogy. And we've been talking on the show with guests like Ian Gordon and Harry Dent and now yourself about the fact that we are in, we believe, an economic winter season. Could you just comment, what would you say the similarities are between this winter season and the winter season we saw in the 1930s, or do you not see similarities?
Oh, no, there are definitely similarities. In fact, the Kondratiev cycle was extremely helpful to me because in Conquer the Crash, I said, there's one thing that's going to happen that no one's going to expect, and that's that interest rates are going to continue to fall, because we've got history going back more than 200 years showing that every time the Kondratiev cycle gets into, as you just called it, winter phase, then debts become a problem. People begin borrowing less money, they begin lending less money, and that causes the demand for loans to fall, and that brings you to a low interest rate. And the stunning thing, I think, to many people is that this has been happening despite tremendous efforts on the parts of central banks to keep the system inflated.
And Bob, in your book, Conquer the Crash, which I'll point out to the listeners was originally published, I believe, back in 2002, you predicted that a period of deflation was ahead. And when you look at available credit, you look at wages, you look at real estate, that has been a very accurate, even I would say prophetic prediction. And you had just mentioned that you see even more deflation ahead, and do you see that in spite of the actions that the Federal Reserve has taken, and certainly the six largest central banks around the world, I believe, have expanded their balance sheets by over 100% in the last 5 years? Do you still see that? You still see the major trend ahead as deflation?
Yes, and when I wrote Conquer the Crash, I said, look, I've looked at all sides of this, I've heard all the arguments, and despite everything, I'm a one-handed economist. I didn't say anywhere in there, well, on the other hand, this could happen. I don't see any way out of the biggest creation of debt, the widest spread debt, the deepest, the most complicated by derivatives ever formed in the history of mankind could possibly end up in an inflationary ending. I think it's going to be a deflationary ending, and it's interesting that we're talking this morning because, as you know, the Europeans have figured out what is the 25th bailout of Greece, and here it's amazing. The market opened on a big upward gap because everybody was so positive, bullish, and excited about the fact, and this is the reality, that Greece just defaulted on a huge percentage of its debt. It's demanding that the owners of the debt take this, what they call a haircut, which means you don't get paid. And this is what I was predicting in Conquer the Crash, and this has happened despite the amazing amount of purchasing power, basically free purchasing power, that the European Central Bank possesses. And still, they have to go to these various governments like Germany and try to rely on them to shore up their members. It's not going to work. Already 80% of the German population is against the bailout. Eventually, politically, it's going to fail, and the debtors are going to give up, and they're going to default across the board.
Bob, very fascinating conversation. We are coming up on a break here in about 30 seconds or so. If someone wants to learn more about your work, what would you advise them to do?
Well, it's very easy. Just go to ElliottWave.com. That's 2 L's and 2 T's, and Elliott Wave as on the ocean.com, and we've got a whole lot of free stuff. You don't even have to buy anything, but you can get Elliott Wave Principle, our first book, for about $20 and learn everything about what we do.
Well, it's certainly a pleasure to have you on the show, and I look forward to picking up the conversation here in the next segment. You are listening to the Legacy Radio Network. We're chatting with Mr. Bob Prechter, author of Conquer the Crash, and we'll continue our conversation with him when Everything Financial Radio returns here on the Legacy Radio Network. Stay with us.